Okay, you are welcome to week 8 of our Forex trading school. Last week in our week 7, I tried to explain the different kinds of traders that we have, the type of trading analysis, and the time zones that we have in the financial market. It will help you to understand what suits your personality or what suits your schedule, and also to understand when you don't have to waste your time in the market, trading a consolidating market and all of that. So that week 7 lesson is very, very important to help you to know what you should be doing and not to be doing what any other person is doing in the financial market. Your schedule is different, your personality is different, so you need to understand this and choose a path that is most suitable for you. All right, so quickly in this week 8, we are going to be looking at price action strategy. We are into the strategy proper, and guess what? I am very, very excited about this because now you are going to understand how simple Forex trading is, or participation in the financial markets in any of the markets of your choice, be it crypto, be it stocks, be it Forex, be it commodity, or any other part of the financial market you choose that is convenient and suitable for you. All right. So I'm going to quickly summarize everything that we have done so far until this point. We understand that I've been saying from the beginning that the two actions you can take in the financial market, or generally, as I use the term that is familiar to us, Forex trading, the two actions that you can take is either you buy or you sell. Nothing more, nothing less. When the market is going up in an uptrend, as we said, there are two kinds of trend, uptrend and downtrends. And then we have, additionally, we must not overlook the consolidating market, whereby market is just moving within a range like this, moving this way within a range. All right. So if we're in an uptrend, we place a buy command. We place a buy command with what the mindset that we're anticipating that price of that asset goes up. And then when we're in a downtrend, as gold started a downtrend, we place a sell command. This is as simple as this. Now, the question would be, then why do people lose in the Forex market? Since it's just buy and sell that we have, it is because of what I taught in week 6 about trading psychology and risk management. What does this mean? Trading psychology is simply the place where your emotions come to play. Okay, your emotions. And the risk management have to do with how you get into the market, the fraction, the percentage of your capital that you allow to be exposed to risks per time. Do you expose a percentage that can carry pullback in case market goes in the opposite direction before going in your direction? Okay, this is very, very important. 90% or more of people who lose in the financial market or in Forex trading lose because of lack of emotional control. They do not have the emotional control. And the other part is people that are greedy, who do not consider that market can go against them before going in their direction, even though they are following trends. So when you don't apply a proper risk management, you will tend to be on the losing side on the long run. And if you don't control your mind not to trade emotionally, then you will also be a losing trader on the long run. So how do people know when to buy or to sell? Okay, that is what the whole strategy you see people teaching is all about. Now, I've told you that price action is the best. Price is king. Price action strategy or price action trading is the best strategy you can learn out there. Understanding the story that the price is telling per time. For instance, when you look at this, you can understand what each of these candles means. You can understand what this chart pattern means, you can understand the story that market is telling you, what the market is telling you, okay? And you do this by understanding what the market structure, the price of asset, the price movement, and that is it. So I used to tell people that price action is not really a strategy per se, but is a kind of trading whereby you watch to see what market is doing. Now, I'm going to summarize price action trading in 3 subheadings. If you can understand these subheadings, I tell you, there is no financial asset you will not be able to trade in the financial markets. Before I give you these 3 subheadings, okay, that will guide us into price action strategy or trading, I want to quickly make you understand something. Most traders think that price goes up because there are more buyers. For instance, in this trend, uptrend that we have here, most traders will think it's because we have more buyers that we are having this. I've explained this from the beginning of this school, that market do not move because we have more buyers, and market do not sell because we have more sellers. No, okay, it's not a game of numbers, okay, it's a game of pressure. Now, if we have 100 people that placed buy entry in this zone, okay, and we have 1 million people that place sell entry in the zone. Now, those 1 million people, they are trading with $1,000 each, for instance. 1,000 times 1 million, you know what that will give you. Then we have these 100 people that place buy entry here, even though they are lesser in number, but each of these people, they placed with $1 million each. Now, which people do you think will move the market? The people that will move the market is the people that have the most pressure. That is more money. It is not numbers that move the market, but pressure, financial pressure. So most traders think the price goes up because there are more buyers than sellers, but that is not true. It is selling or buying pressure that drives the price action. It has nothing to do with having more buyers or having more sellers participating in the market. Okay, so now what is price action trading? Price action trading is simply understanding the imbalance between buying and selling pressure, understanding when the pressure of buyers are more than the pressure of sellers in the financial market. I taught you momentum. There was a week I taught you about price momentum. Please go back and listen to that lesson again. Take that lesson again. Okay. I taught you about how you can know when the pressure of buyers are more or when the pressure of sellers are more. But just focus. I'm going to also talk about it here because it's part of the strategy. All right. So price action trading is understanding the imbalance between buying and selling pressure so that you can better time your entries and exits. You can better time your entries when you understand, okay, now buying pressure is more, so you buy. And then when you notice that selling pressure is more, like here, you sell. All right. So when you understand the imbalance between the buying pressure and selling pressure, trust me, there is no market, there is no asset that will be confusing to you. Okay, now that will improve your trading result massively. Because when you look at this price, you can see the pressure. From here, you can see more of buying pressure than selling pressure. Now, look at here, we have more of, large red candles telling you that what the selling pressure is more. Look at the rejection. I taught you about momentum, rejection, and the rest of them. Okay. Then when you look at also other assets, you can tell that here we have more buying pressure. This is a buy trend. But here we've been going down, having more selling pressure, more red colors than blue colors. All right. So if you look at all of this, look at Bitcoin, we've been having more buying pressures here. Okay. Suddenly we started having more selling pressure. You can see more red candles. So it's as though Bitcoin is beginning to reverse, maybe temporarily or on a short term or on long term, dependent. We will keep following, you will keep watching. One thing about price action trading is that you don't stress yourself about what may happen next week. You just keep watching and be seeing it playing out here. You just be looking for your entry. Then when you also look at Amazon stocks, you can see we have more sell pressure here. And then suddenly we started having more buy pressure from this zone. So you cannot come and be shorting or selling Amazon right now. Before we get into these three things you will do, three steps you will take while placing your trade using price action strategy, I want to mention some benefits of using this price action strategy. Now, if you are trading price action strategy or you are engaging price action trading, you can ignore fundamental news because price is all you need. Whether news or non-news, price is all you need. Now, unlike trading indicators, price is price. Okay, you are looking at it, you are watching it, you are not looking for any mathematical calculations behind the scene to tell you what to do. All right, and you can better time your entries and time your exits by watching what price is doing. And also, price action helps you to identify the different market conditions so that you can use an appropriate trading strategy to respond to them. And when the market changes, so you also change your strategy. I taught you that there are different kinds of market structure. There are sometimes market enter consolidation, that is a ranging market. Okay, you cannot be using the same strategy you use when you are doing trend following or trend trading to trade a consolidating market that is just ranging up and down. You need to understand this. When the market condition changes, you change your strategy. And guess what? In this price action strategy, I'm going to teach you according to what the different market conditions, the different strategies you should use. All right. So, and finally, price action trading is not a strategy. I've said it, but a framework for trading in different market conditions. Some of the indicators out there may not even consider market conditions. That is one thing. Let me mention the thing about robot trading. Robot trading is programmed to trade a particular market condition. So what happens is that in a market condition that the robot is unfamiliar with, robot will make a lot of losses. I'm still going to delve into robot trading during the mentorship, but I need to mention this quickly. Some robots are programmed to be effective in a trending market where we have higher high, higher lows, higher high, higher lows, whether downtrend or uptrend, but are not programmed to be effective in a ranging market or consolidating market. That is when you see robots losing a lot of trade and even blowing people's account. Why? Because that market condition, they are not programmed to be effective in such market condition. But when you are using a price action strategy, you watch, you see, is this market trending? Okay, this is what I will do in a trending market. Is it consolidating? This is what I will do. Like if you watch here, just watch this market. Look at what is happening here. So in this kind of market condition, what do? You trade differently. Now, let me also mention that it may take a lot of time to validate a trading strategy in price action. It may take a lot of time, but I'm going to guide you. The essence of mentorship is that it cuts time, it shortens time for you. I'm also going to guide you through how you can develop your own trading strategy, okay? I'm also going to teach you what I do to make money in this Forex market. Now, join me. Let's go to price action strategy. Are you ready? Now, let's go there. There are three things you will do or three questions you must ask yourself while using price action strategy. And these three questions summarizes the strategy. Number one and number two and number three. Let me list them. Now, these are the three questions that you ask yourself each time you are engaging price action strategy. So the first question you ask yourself is, or the first question you must respond to is what to do. And this what to do is, am I supposed to be buying or am I supposed to be selling? That is the first thing you ask yourself when you open your chart. Now, I taught you about market structure. This question you are asking yourself is simply to answer the question of what is the market structure? What is the market structure? That is the first question you ask yourself. What is the market structure? Market structure will tell you what to do. You remember that I taught you 4 classifications of market structure. 4 classifications of market structure. Number 1, I talked to you about accumulation. This is an accumulation. Accumulation happens after a sell ride. Accumulation happens after a sell ride, okay? If the market is in an accumulation, what do? This is my counsel. Wait until market breaks out of resistance. Remember, please, you need to, you will now see why I taught all the things I taught before now. Some persons might have skipped it. If you have skipped any of my classes, please go back to them and listen, okay? Now, accumulation happens after a sell ride. It happens this way. Why are we stopping here all the time? Because there is what? A resistance, a resistance. So if you really want to be profitable, what do? Do not trade this zone. Allow for market to give us a breakout of this zone, and then you wait. There is going to be what we call a retest. Market is going to discount back into this zone, and then you buy. Trading, this is the most, this is the riskiest place to trade. If you want to lose your money, you can trade here, right? But also, if you master these things, you can also trade profitably in the zone, all right? I trade it. You can trade profitably in the zone. So accumulation happens after a sell ride, whereby you have a ranging market. Market is always hitting a resistance, and each time it hits that resistance, it goes back to a support, comes back, right? So what I advise you to do, if you answer the question of what to do, and that is what is the market structure, and you notice that market is in an accumulation phase, okay, if you're a day trader or swing trader, wait for breakout. Breakout is market going out of this and starting an uptrend, because after an accumulation, we have what? Advancing phase. This is what? Advancing phase, whereby you start seeing obvious higher high, higher low, higher high, higher low, higher high. Okay, like we saw here, after market broke out of this place, we started making what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right, you can see it obviously. So you can find entry near supports, near the lows of supports, or the first pullback after breakout if you are trading an accumulation phase. Okay, what this means, if you are trading here, look at this, in an accumulation phase, do not buy here. Always buy at support. Support. Where market finds support. I've taught you support and resistance. Where market finds support, always buy below. Okay, and then you take your profit here. You sell up, you take your profit down. All right, but I don't even advise you to sell in an accumulating market. If you notice that sell pressure has just reduced and market entered accumulation, what you will do in an accumulating market is to buy in support zones, or you wait for what? Breakout, confirm breakout. Once market breaks out, the next thing is that we start having advancing phase, which is higher high, higher lows, higher high, higher lows, and market keeps advancing. But then if I want to buy stocks, I like to buy my stocks when market is still in growth or introduction phase. You remember product life cycle I told you. which is what? Accumulation phase. When I notice that market is in accumulation phase, or what I would term growth and introduction phase in product life cycle terms. So what I will do is that I will buy stock and keep stocks that I keep for 6 months, 3 months, 1 year. So I buy stocks and keep at this phase. But if it's for my daily trading or swing trading, I wait for breakout, or I buy at support zones. All right. So what if you now notice that market is in an advancing stage? Market has given us a breakout, and now we are making higher high and higher lows. If you determine that market is in an advancing phase, now it means that what the buying pressure finally overcame the selling pressure. That is what that means. It doesn't mean that we have more buyers than sellers, but the pressure in the market is on the side of the word buyers. So if buying pressure is more, why would you sell? I'm asking you, why will you sell if buying pressure is more? So if buying pressure is more, you will see series of what? Higher high. You must see higher high, higher lows, higher high, higher lows. That is when you know that what we are in an uptrend. Now, what if you notice that market is in a distribution phase? Remember that distribution is similar to accumulation, only that distribution happened afterward. Buy pressure has decreased. If you noticed here, we have a little struggle here before we finally broke down. This is distribution. Distribution is simply when buying pressure starts reducing, and then, we start having selling pressure coming in. Now, let me mention this very importantly. There is no guarantee market will break down. Remember, here we have breakout. And then when it is distribution, we are talking about breakdown. All right. There is no guarantee that what market will break down during distribution phase. But if it breaks below support, like this is a support zone, that is the last higher low, okay? The last higher low we have in this uptrend. If it breaks below it, then we can be sure that yes, the selling pressure has now overcome the buying pressure. That is why it is dangerous to participate in a distribution phase or accumulation phase. So if there is anything you must avoid these two market conditions, accumulation, distribution. But before you can be profitable in this market, you must answer the question of, what am I to do? Should I be selling? Should I be buying? And the third option, should I wait for market to break out or break down, or for me to understand what market is doing per time? All right. So when we have a breakout, that's where we move on to the final phase, which is what? Decline. Now, if you notice what is happening, we're in a decline phase. Why? Because market has broken below this support. We're in a decline phase. So what should I do in a decline phase? Okay, now I should be selling in a decline phase. You cannot see that selling pressure is overcoming buying pressure and you are buying. That is why people who trade retracement, they lose a lot of money in the financial market. Remember what I told you retracement is. When we are in a buy trend, higher high, higher low. Now the move downwards is what we call retracement. This is retracement. This is retracement. Okay, it is like friction. You are struggling against the flow. You are going against the flow, and most times you will be burnt. You will lose your money. So if you are able to answer this question, this first question, what to do, which is what is the market structure? If you answer this question, you pen it down and keep it. Now I know this market is in an uptrend or downtrend, maybe accumulation phase or distribution phase. You are 2 steps ahead of profitability. Now you go over to the next question. Number 2, where do I act? Where to act? I've opened my chart. I've determined the market structure. I've known what to do. I've known that I'm supposed to sell or I'm supposed to buy. All right. Now, where do I act? I'm going to say this. You will act only in the areas of value. Let me put this down. What are areas of value? Areas of value are zones like support and resistance zones. For instance, let me show you. When we are in an uptrend, notice that we are making higher high, higher low, higher high, higher low. We cannot call this high because it's not yet higher than this. So the next we have higher high, right? Higher low. All these places that market is stopping before making a new high is what we call support zone, right? Support is an area of value. This is an area of value. So there are different ways you can know areas of value by drawing out your support and resistance zone. I'm going to show you, or by using Fibonacci, I'm going to show you how to use Fibonacci tool, okay? Or let me quickly even show you how to use Fibonacci tool. Look at this place. You can see this tool here. So it is used to know this series of discounts that you can have in the financial market. All right. Let's say that I'm trading this. I want to make this entry higher high, higher low, right? I want to place this entry. Let me draw this very well. Let me start from the beginning. Here we have higher high, higher low, higher high. Let's say that this has not happened, this pullback has not happened, and I want to know where do I place my next buy entry. So I will quickly bring my Fibonacci tool and place it from the previous low where we had this candle to the new high that was created. Okay, so if you notice, you see that price came into 61.8 discount Fibonacci level, came into there and then started pushing back up. So if you choose any pair, backtest. What I mean by backtest is go back to years back. You must do this backtest to validate your strategy. For me, in gold, when it comes to gold, I use 61.8 Fibonacci level. 61.8 Fibonacci level, if markets discounts in gold 38.2 discount, 38.2% discount, I do not trade it. I trade 68%. Anything from 68% to 100%, you will only see me make entries inside here. That is why it's as if when you see my entries, they are like sniper entries because I look for best setups. I do not care about every opportunity. When market gives me 38.2 discount, I am not interested. I'm always interested in 61.8 to 100% discounts, all right? So these are areas of value. You can use your Fibonacci level to know areas of value, to know areas of support. People can also use moving averages to know what areas of support, all right? Now, let me quickly put 20 moving average. Moving average is an indicator that can help you to identify the areas of support. Now, let me put moving average there. Let me use 20 moving average. Okay, you saw what I did. Period 20 moving average means 20 period of time. If I'm in daily time frame, it means 20 days. It will show me the average. So I'm always using exponential. Okay, exponential is best for me. Okay, every other thing the same. My color, what I choose, and you see, okay. Now, if you look at when price was there, this moving average was in that zone. So people can use moving average also to know, okay, to know where the areas of support and resistance are. They can be effective. But for me, I always use, okay, Fibonacci level. So you draw Fibonacci from the previous high, from the previous low to the current high that you are now looking to buy from there. If it is, what is it called? A downtrend, when you carry your Fibonacci, just click on it. You draw from this to the current low, okay? This to the current low. If it's daily, for instance, Let me zoom this out. This I'm looking at daily, as you can see. Sorry. I'm going to drag my Fibonacci from up to the new low that was created. This is the low, okay? For me to trade this market, I will be looking at 61.8 Fibonacci level. I'll be waiting for price to come into this zone. Once price come into this zone, I will look to sell. I will start selling. All right, I will start selling this market. That's what I will do if I'm trading this paper. I'm not trading Euro USD, but that is how you can know what areas of value. Fibonacci can help you. Moving averages can help you. All right, and you can also use your eyes. This is what I mean by using your eyes. When you see zones or areas that market has touched many times, look at this. You can use your eyes. When you notice that this particular spot, look at here, 1, just follow my cursor, 1, 2, 3, 4. Several times market came to this zone and stopped. Now it tells you that there is something about this area, is an area of value that makes traders to take action in this area. Now I've put this in weekly so that we can see clearly. If you notice this zone, look at this. Several touches of candle. Remember, this is not a point, it's a zone, it's an area. Look at this. You know that there is something about this area. Look at, even when market came up, it touched it and bounced off. You will see that there is something about this area, is an important zone. Okay, so that is how you also know areas of value where market has several touches, more than 2 to 3 to 4 to 5 touches over the years or over the months or over the days. You know that that place is a very, very important area. Okay, but if you are trading as a day trader, like you are using 4 hours time frame, as we've been in 4 hours time frame, you can use, or daily time frame, you can use Fibonacci level to mark your areas of value or know where to enter. And that does not mean that immediately market enters 61.8. Don't be an aggressive trader. You start selling or trading immediately. No, what you will do is when market get there, you will wait for change of character. We are coming there. We are coming to the third point. That is when to act. You must identify where to act. Once you identify where to act, like I just did, you see what I just did. So this is what I will do. I will take my rectangle and I will mark out the zone. From here to here is where I should act. I will mark it out and wait. It may not happen today, it might happen tomorrow. You just see me waiting. And then where will be my SL? My SL will be slightly above this place because I know that once market come above this very high that we have here, then we are changing to uptrend again. So that will be my stop loss zone. That is the area that invalidates my setup. Remember, I taught you in the previous week how to set your stop loss, where to set it. You set your stop loss in the areas or the zone that invalidates your setup. Okay, the areas or zone that invalidates your setup. So don't mix this up. Now let's move over to when to act. We've said that, okay, we're in a downtrend, we are going to sell. We've known where to act. That is what 61.8 Fibonacci level for a daily retracement. So I'm expecting that what market comes into this place. So when market comes into this place, what do I do? What is my signal? That is where selling of signal comes in. You can know where to act, but you don't know when to act. When to act is when you see the signal. And I told you, I gave you about 3 price action in one of my classes. I can't remember the week exactly, but I told you about price rejection, change of character, failure swing, and momentum. These are the things that help you to know when to act. All right. So this is what I would do. Once price comes into this place, I will go down to 5 minutes time frame. I'm telling you my method. Depending on whether you're a day trader, swing trader, position trader, you will not use the same time frame for entry. Please take note of this. That is why I taught this last week in week 7. The kind of trader you are will determine what your signal will be and at what time frame your signal will be. Now, if you are a day trader, you might be using 5 minutes to make your entries. So once market comes into this place, I will go down to 5 minutes and I will wait for this to happen in 5 minutes. Look at this. In 5 minutes, we'll have higher high, higher low. I'll wait for this to happen. Market to come below the previous low. I will say it is time, and then I'll wait for it to come back inside this price, and then I will sell. My SL will be here, and then we'll ride downwards. So when to act, there are a lot of things that can be your signal. What signal did I use here now? I used change of character. Market change back to the downtrend inside my area of interest. Inside my area of interest, remember, it's not if market change character here, I will come and sell. No, I must mark out the area that interests me according to my strategy and my plan. So when I now see change of character, I will wait for retest, that is market going back inside that zone the second time. To fail, I will sell. This is how I get sniper entries. I don't just immediately market comes into it, I'll start selling. No, I'll wait for change of character. That is one signal you can wait for. Second signal is that you can use candlesticks, like the use of momentum. The use of momentum. Look at this. Look at this place where market changed. Look at this, please. Pay close attention to this zone. We have about how many bullish candles, and suddenly we have one red candle that came and closed below two bullish candles. To somebody, this is a signal, because you can now see that selling pressure has surpassed buying pressure because of that candlestick. Someone will start selling with this signal. That is momentum, the use of candle momentum. When opposite candles suddenly closed, covering about 2 to 3 candles of the previous people that were winning, in this case, the buyers, you know that what is a signal for you. That is using momentum. And this one here I did is use of what? Change of character. That is by using chart pattern. It used to have higher high, higher low, and suddenly we started making lower low, lower high. And the next one is also combining failure swing and change of character. This is what I mean. Market got into this place and you saw something like this. Failure swing. Remember, failure swing is when we have market giving us something like equal high. That is when market failed to give us a new high or a new low, as the case may be, depending if we have an uptrend or downtrend, right? So, and then not just that market came below here, it broke this support zone. This is also a signal. Do I sell yet? No, I have to wait for market to come back and fail the second time or the third time before I join. All right, but most importantly, I have seen these signals. All right, some persons also use indicators, but I am not here to teach you indicators. Remember, like crossing of moving averages, you use 2 moving averages, say 20 moving averages and 50 moving averages. Before these moving averages tell you signal, sometimes it's late. Price action have already shown you immediately. So this is when to act. You act when you see signal. So in your trading plan, you must identify what your signal is. You must identify what your signal is. All right. So what is the conclusion here? Price action trading is simply using market structure to tell you what to do. Whether you should be buying, you should be selling, or you should wait. And then using areas of values to know where to act. Areas of values like support and resistance zones, Fibonacci, moving averages. These things can show you where the areas of values are. And then lastly is knowing when to act using candlesticks or candle patterns. That is candlesticks in terms of rejection, or big momentum, or like big bodied candle, or change of character or failure swing, and so on and so forth. Please, is price action trading not simpler than all the other complications out there? It is very, very simple and professional. You understand what is happening, you read the stories, and you make money out there. Now, I'm going to move over to telling you the 3 formulas you can apply in different market conditions. 3 formulas you can apply in different market conditions. Remember, I told you that in different market conditions, you do not use the same strategy. In different market conditions, you do not use the same strategy. When market is consolidating, what do? When market is trending, what do? When market is reversing, what do? Now, join me. Let's move over to the next lesson so that I will teach you 3 formulas that you can use and beat the market at all times when the different market conditions changes.